This conference will now be recorded.
Good evening, everyone. So, we will be having SAP FICO, that is Financial Controlling. It is SAP, we don't call it as SAP. Okay, first of all, we call it as SAP, we don't call it as SAP. Before I start with the introduction part, let me ask you, you're from which class? You can
BCom,
respond me, you can reply me. BCom, okay. Others? All are from the
ma'am.
same batch?
Ma'am,
Yes,
I'm
From
from
Akshaya?
BBA.
BCom.
Amrita is from BCom, okay.
Ma'am, I'm Akshay. I'm also from BCom.
Okay. So all
Ma'am,
are from the
Amrita
commerce
from
side
BBA.
from BBA.
Yeah, ma'am.
Okay. Fine then. So all are from the commerce side. So probably we will have a details about accounting parts. So before I start with
This
the
is
SAP,
Kritika from BSc
let's
Data Science.
Kritika from
BSc Data Science.
BSc Data Science. Okay. Any other than any students from other courses other than commerce? I think Advika, I know you. Advika, Preeti, I think you have already been in one of my batch. So hopefully, fine. So Kritika, do
Yes.
you know accounting?
No.
Fine then. So first of all, we have to understand the concept. What is accounting? Then we'll enter into a SAP. So this is just a conversation between you and me. That is, we are going to learn accounting. What is accounting? So how we are going to use this accounting, that is financial activities in our company. Financial activities in our company. So when I start the financial activities, that means when we start doing a transactions, we must have some idea what is accounting. So, can anyone say what is accounting? Why it is required for a company?
Ma'am, summarizing the transaction, verifying them is
Okay.
accounting.
Okay. Yes, you said it is summarizing and verifying. Underline this summarizing and verifying. What you will summarize, what you will verify.
The transaction,
Very good. Transaction. Now, what is transaction?
the amount which is got debited or credited.
Very good.
Is
So, any
verified.
transactions. So, that means, see, transaction means anything that happens in a business, anything that takes place in a business. So, business is meant for what? For trading. Usually, it is a trading. That means we may buy and sell the goods, or we may buy and sell the services. It can be a goods or services. So anything which we have, say example, now you have a money. Take it as you have today 100 rupees. You are spending few amount and few balance you have. So this takes today the spending of money which you are doing today. Now, when I ask you, what did you do with this 100 rupees? So, tomorrow, when I ask you this question, you will be able to answer me, right? You know how much you had, for what you have spent, and what is the cash you have left with your hand. This you will be able to answer. The same thing, if I ask you after 1 month, will you be able to answer me? Yes? No? Can you answer me if I ask you what did you do with the 100 rupees that I gave you in a previous month? Will you be able to answer me this after 1 month? Will you remember this?
Yes, ma'am.
Something says something. No.
Yeah. Few may remember. So again, if I ask you after 3 4 months, will you remember this?
No,
No.
ma'am.
Not.
No, ma'am.
So we whatever we do in our company, we must record it. Whether I pay the money, whether I receive a money, Whether I am doing a purchase, means when I pay the money, I may pay to whom? I may pay to my supplier, I may pay some expenses, right? When I'm receiving a money, I made a sales, for that the customer is giving me a money. Again what happens, we are going to receive money from the bank, interest we will receive, commission we will receive, some sources of income we will receive. So all these activities that takes place in a business will be recorded as a transaction. Now, Amrita said that we will be doing whether it is a debit or credit. Yes, we debit and credit. How you will debit, how you will credit. That means how you will guess whether it has to be debited or it has to be credited.
Ma'am, it depends upon the accounting rules, the golden rules.
Very good. Yes. So I hope you all remember those golden rules. Can someone say me what are the rules we have? We have a nominal account, real account, and personal account. Isn't it? So, nominal account. So, every transaction we will have either a debit or credit. Debit or credit. So, what I have to do, which I have to debit, which I have to credit, this I will be knowing. So, based on that, I will be recording my transactions. So, let's see this rules first. Then I'll give you an example how to do with this. Okay, so first of all, we will come with the real account. Real account, we have to debit what comes in and credit what goes out. Okay, debit what comes in, credit what goes out. So debit what comes in, credit what goes out. Okay, let me give you an example. You are making a purchase of goods. Purchase of goods. You're purchasing a goods by paying cash. Paying cash. Now what you will debit here? We have a purchase and then cash. Then we have a goods. Is it visible? Should I have to zoom this some more?
No, ma'am, it's visible.
So we have a purchase of goods by paying a cash. We are purchasing some goods by paying a cash. Now what is coming to you? Goods is coming. Goods is coming to you in the form of where we made a purchase. So what we will do by giving this example, we'll take here as the debit. Debit, you will be making a purchase of goods, or you can only show as purchase. Credit what? Debit what comes in, purchase of goods, the stock item is coming to your business. Credit what goes out. I made a purchase, I'm paying a money, cash is going out of my business. Always, whenever you do a transaction, you have to think only in the situation whether the company is doing in the terms in form of company only. You have to understand, you will not think that whether you are receiving or you are paying. You will always assume in the form of cash, in the form of company. Okay, assumption must be based on company only. Okay, whether the company is receiving, company is paying, company is giving, company is taking. So now company is making a purchase of goods by paying a cash. So from the company the cash is been given to other persons. So here whenever it comes to a real account, it will be either a cash, it will be a purchase, okay, or it will be a stock. Stock means the product. You can say it as product, you can say it as stock. So you can say it as uh, goods, anything you can say. These are the three things which comes under real account. Now let me give you one more thing. We will go for personal expenses. That is personal account. So what we will do? Debit the receiver. Okay, and then we will go for credit the giver. Okay, now debit the receiver, credit the giver. So I am taking the same example but in a different format. Okay, purchase of goods by cash. So we are taking purchase of goods from Mr. X and company. We are making a purchase from X and company. Now we have what? Mr. X. Mr. X we have. So what we will do? We have an example here. With the example, what we are going to do? Purchase of goods. So when it comes to a personal account, it is name. It is a name. So like noun, how we treat the same way. Name of person. It can be a name of a company. Okay, name of person, name of a company, name of any institute. It can be a school, college, or any training institution, any other bank institute, anything. So anything which is institute, person, company, institute, even the bank, even a bank, name of anything, individual person, name of a company, name of an institution, name of any government sector. Okay, anything it comes, all this we will be treating here as personal account. Now, since we have a personal account, we may have only the personal account together, or we may have two different accounts. Two different accounts. Now, when I say this purchase of goods is what for me? It is my real account. Mr. X and company, it is the name of a company. So this becomes what? This is my real account. I mean the personal account. So the transaction what takes place here is debit. So what we have to debit here? Purchase of goods. Debit what comes in. Purchase of goods. Debit what goes out. We are not giving anything. But we have the other part. Who is giving me these goods? Who is giving me the goods? It is Mr. X. So we are receiving. Debit the receiver. We are the receiver. Receiver of purchase. That is goods. Now credit the giver. Who is giving me here? The person who gives me here is Mr. X and company. Are you able to understand? If anyone has a doubt, please let me know. Anybody has a doubt?
No, ma'am.
Okay, thank you. So let's proceed then. I have to ask whom? Kritika. Kritika, you are the one, right? You said me you're from some other BSc, right?
Yes, ma'am.
You are able to understand, Kritika?
Yeah, yeah.
It will be difficult in the first 2 3 classes until you understand the concept of accounting since you are not from the background of accounts. So simple format, I'll just give you 2 3 examples so that you will understand how to use in a SAP. Clear?
Okay, ma'am.
Good. So next part is where we are coming with a nominal account. So what is this nominal account? Nominal account is related to expense and income. So it can be anything. It can be anything. Whether whichever the expense you pay, a rent, you pay a salary, you buy printing and stationery items. You are purchasing some housekeeping products like phenols, brooms, anything you are purchasing for your office. So those things you are paying the wages, labor costs, manufacturing cost, all these things. Or when you are making a whether you are earning a profit or loss, it can be some goods which is lost due to theft or some fire accident, or you are giving some services, you are gaining some money. So this kind of things. So what we are doing here in a debit? So debit all expenses and loss. In credit all incomes and gains. Okay. So these are the three rules which we have. So let me give you an example saying that what we will do. Okay. We made a purchase here, right? We made a purchase. Let's do one more entry here. So after purchase from Mr. X and Company, Mr. X and Company, we are paid the purchase amount. Okay, whatever it is, just we are paying it. Purchase amount we are paying to this person. Okay, paid purchase amount. So how we are paying? If you are paying by cash, so we will take first step by cash, and second step we will see in the entry in the method of bank. Both are same, but why I'm saying you this is you will understand what type of rule it is. So bank we will take it as ICICI Bank. Now we made a purchase. Now we have what? Mr. X and Company. The person we have a cash. So first entry we are going to do. We have already made a purchase and purchase entry. After purchase we have to pay them a bill. We are going to pay the money. So how we are going to pay? So what we have a rules here, debit the receiver, credit the giver. So who is going to receive the money here? I need an answer from your side. Who is going to receive the money from here? If I'm paying a money, if I'm paying a cash for the purchase what I made, who is going to receive the money?
Mr. X company.
Very good. So it is Mr. X and Company is receiver. Debit the receiver. Mr. X and Company is the receiver. Now who is the giver? We are giving. So when we are giving, we don't show ourselves as a debit or credit. We say that how I'm giving, from where I'm giving. Now say if I'm paying by cash. So what happened here? This becomes your personal account. Right? It becomes your personal account. And credit, this is a cash. So what we say, debit what comes in and credit what goes out. So this becomes your real account. Okay, this becomes your real account. At the same time, if I'm paying by a bank, if I'm paying through the bank. Okay, if I'm paying through a bank, what happens now when I'm paying through the bank? Right? Again, the same concept. We will use a debit and then a credit. Okay. Now what happens here? Debit, the same thing what we have done. Debit the person. Debit the receiver. Credit the giver. Who is giving here? We are giving, but we also have a bank account. So we will show it as ICICI Bank. The ICICI is giving. So here bank is also your personal account. Okay. So here purchase of goods. This is your real account. This is your real account. And then your Mr. X will become your personal account. And where we have the other example. So purchase of goods, this is a real account, and this is also a real account. Okay, so these are the three rules which you have to remember. Okay, so let me highlight this. If anybody wants to make a note of this, you can make a note of this. Okay, these are the three rules which we have discussed now. So based on the three rules only, all our company will be doing the transactions. Okay, now let me ask you why we are going to do this transaction. So the ultimate motive of a business to record this transaction to find at the end whether they earned a profit or loss, to know whether the company is earning profit or loss, how much extra money is being earned. Okay, so what we will do after doing all these things, end of the day, to find the profit, we will be preparing the financial statement, trading account, profit and loss, and then the balance sheet. Right? This is what we will be preparing. So let me ask you, what is the content that you will be showing, or why this trading account is being created? Why we have to make this trading account? Why do we have to prepare the trading account? Can someone answer me?
Know the gross profit or loss of the business.
Yes. So what is this gross profit is?
The profit earned by the business.
Profit earned by a business. Good. How you will guess whether it is a profit or what it is?
If debit is more than credit, then it is profit.
Okay. What you have to show on the debit side, what you have to show it on a credit side? Yes, ma, answer me. Okay.
On debit side, purchase.
Mm, very good.
On credit side, sales.
Okay. Why you have to show the sales and purchase in a trading account? So let me explain you. What is trading account means? Trading account means the trade. What is the main motive of a business? To make a purchase and sales. Whether you purchase the goods or the services. So that is the ultimate motive of a company, what they have to do. So what we will do is, see, if it is a startup company, directly we will show what is a purchase, what is the sales we made. If it is an existing company, right? Existing company means the company which is running from 2 3 years, or from 2 years, or from the last year. This is how we will be using. So what we will do is, we will bring how much we made a purchase. From the purchase, we will minus the sales. First, we have to do all to overall purchase. So overall purchase in the one whole here, how much I made a purchase. In the purchase I made, how many damaged goods I have written. So you can see here, purchase what I made, and returning how much goods I have written, I have deducted. From this purchase of goods, example, I made a 100 goods purchase. In that 100 goods, 20 I made a return. I have 80 stock. In that 80 stock item, I made a sale of 50 stock item. 50 stock item, and they are returning 10 stock item. So from the 50, 10 has been returned. Now my goods which I'm having now, say I made a purchase of goods 100 units. 100 units. In this, I have returned the damaged goods 20. So now how much stock is left with me? It is 80. Then in this 80, I made a sale of 50. I made a sale of 50. In this, the customer has returned me how much? 10. Now how much stock is left? What is my closing stock? How much stock at present I have? How much? Sorry, someone answered me. I didn't hear you.
40.
40. So, see here, out of 100, 20 is been returned. So, I have 80. In this 80, in this 80, we have made a sale of 50. So, how much I have? 30, right? Plus, plus in this 30, this 10 is also coming to me, right? They are returning to me. So, that 10 will also get added. So, it is 40. Exactly, it is 40. So this is how we will be doing. Okay, this is the main motive of doing this purchase and sales. Now what is this all the other option, wages, carriage inward? When we say about this trading, the trading of a business means trading account will only includes the trading activities. Trading activities, that is your buying and selling, whether you buy and sell goods or services, anything is related. Plus, anything, any expenses or income that is directly related. Okay, that is directly related to you. To what? To your buying and selling activities. Okay, when it is something directly relating to buying and selling activities, or and to the product, which is directly related, we will come here. Now see, I have a raw materials, I need to manufacture this. To manufacture, I need a factory, I need a fuel, I need a water, I need laborers, one who works in a factory, labor charges I have to pay, wages I have to pay. To bring this raw materials inside my factory, I need a carriage inward. So all these things which is directly related to business, that means my buying and selling. In a trading account, we will show the purchase, sales, so direct expenses and direct income. When I say it is direct expenses or income, that is which is directly affecting your goods, directly affecting your goods. So it can be in a manufacturing expenses. So I said this trading account. Trading account means the trade which you do. So expenses and income, when I say this, something which is related to expenses and income, this expenses and income that may be related to product, like packing charges you have, and you have production cost, manufacturing cost. So manufacturing cost you have, and something which is related to factory where you are going to manufacture it. So it is factory expenses. Okay, so here are the examples which we have for this goods and sales trading. After this, I will get to know what is my actual profit or loss that I earned only from the trade. Only from the trade, right? Only from trade, whether I earned a profit or loss, I'll come to know. Now, this is not only my part of business. Other than this, I also have few activities which I also engage in my business. What activities I'll engage here? So am running a business for making a purchase and sales. When I make a purchase and sales, what else I'll be doing? I'll be paying a salary to my employees. I'm paying for printing and stationery. I'm using an internet in my company, right? I'm using an internet in my company. Then for housekeeping, I'm paying. So there are so many activities which we are paying here. When we are paying so many expenses, and also I'm maintaining a bank account for paying the expenses, I render some other services or some other activities. So in that case, what happens? I may earn some, I may pay some money, I may also receive some money. So that is where we are recording the activities of profit and loss. So this profit and loss is not a trading. Trading is only buying and selling. Here, when it comes to your profit and loss, it is related to administration of your business. So where this administration of business will happen, it happens in your company, that is your office, right? Anything that is happening in your office atmosphere when you're spending expenses or when you're earning some income, you will be showing here. So these expenses, we call it as indirect expenses. Why we call it as indirect expenses? It is not directly related to a business, additionally related to a business. That means directly not affecting my actual motive of a business, that is buying and selling, trading activities, whereas it is related to my administration activities. So indirect income. So these are the sources which we will be having: office rent, printing and stationery, telephone, postage, discount, insurance, audit fees I'm paying, rent I'm receiving, bank interest I'm receiving, okay, commission I'm receiving. All these things, whether I'm receiving, whether I'm paying, will be recorded. And finally, I'll come to know whether it is my net profit or my net loss. So after this, the final statement which will disclose my position of my company is my balance sheet. The balance sheet. So this balance sheet what we are preparing here, the balance sheet which we are going to prepare here is, will have a two components: assets and then the liabilities. Assets and then liabilities. So assets can be, can someone say what are the assets you will be showing on the balance sheet?
Plants and machinery,
Okay, which part it comes? Asset side, liability side?
liabilities, debentures,
Sorry, ma, debentures. So what happens here is we have a two components: assets, liabilities. Assets and liabilities. Asset side, we will have what and all we own for a company. What we own for a company. That means what all the things that company is having. These are the things which we show on the asset side. So company is having a cash balance. Today I have 2 lakh rupees in my cash counter. So that 2 lakh is my, that is one which I own for my company. I have a bank balance of 5 lakhs. So that is the company is having a bank balance. Company is having 10 computers, 15 laptops, plant and machineries, ACs, fans, right? Projectors. These all are a fixed assets. Company is having a good name, fame, goodwill, trademark, patents. So all these things will come under your assets only. Tangible assets, intangible assets. Then, if a company is giving a loan to others, the company will also receive the loan amount in return along with the interest from the person to whom it has given an interest. So loans and advances. Company is paying an advance to an employee. When I pay a salary, I will deduct this advance. So this will come under assets, right? So advances. So then we will go for the liabilities. In a liability sides, we will be showing the one which company is liable to pay to someone, as to give to someone. So these things will come as your liabilities. So that is, I have to pay mortgage, I have to pay the loan, I have to pay ESI, PEF. If I am using a credit card I have to pay. So all these things. But the most important thing in the balance sheet is this capital, the capital part. Okay, so in this capital means, can anyone say what does this capital means?
The amount which is invested in while starting the company.
Very good. So it is a initial money that is been given, that is invested by a person to run a business. Say example, now Mr. A is starting a business. Okay, so as started business from today onwards. So he is starting a business by money, that is the cash which we brings for running a business. Suppose he is bringing some 5 lakh rupees as a capital, as a cash. This cash we call it as capital. This cash we call it as capital. Okay, capital. Now, in this capital, if Mr. A, after starting a business, again, he is bringing another 2 lakhs, 2 lakhs as a cash for running a business. So, for more smooth running of a business, he is bringing for business. So again, this is called as capital. But what we also say, we say it as it is an additional capital introduced, right? It is an additional capital, but we still treat this as a capital only. It is a capital. Now, if Mr. A, Mr. A is taking 50,000 of cash from business for his personal use, for his business use, means if he is taking a money for from business for okay, let me take it as business activities, then this is not considered for anything, so we will treat it as purchase and sales itself. So for when he is taking money from the company for his personal use, for his personal use, then we call it as drawings. Drawings. So we can say it as drawings, again a capital only. It is also a capital only. This will have an effect with the debit and credit. So when it is debited, when it is credited, it will get nullified. Okay. Why this drawings we are taking? Because we have a rule. We have a rule in the Companies Act. Companies Act. You know the Companies Act, you would have read this. Companies Act. So the old act is 1956. The recent act is 2013. So as per the Companies Act, okay, as per the Companies Act, every business entity means the company. Every business entity is different from business owner. Business owner. So let me explain you this. So say example, now, okay. So for this business entity, I'll take it as we have a company ABC private limited company, okay. So, and I also have a business owner. The name of the owner is, we will take it here as Mr. What we will take? Okay, this Mr. Ram we will take. Mr. Ram. So that is your business owner. Business owner. Now, as per the Companies Act, they say though the business owner, that is Mr. A, is running a business, ABC Private Limited, we treat this two also. ABC Private Limited as one person, Mr. Ram as one person. Both are different person. So that is what, when Mr. A is taking a money from the company, then we say that he is taking a company's money. Okay, he is taking a company money. That is what we say it as drawings. We are not saying it as capital withdrawn. We are saying it as drawings. So he is taking for his personal use. Okay. Can you see this? There is one more thing. Actually, this is wrong actually. This is not a net loss. You will not show the net loss on the liability side. It has to show the net profit. I think this format is wrong. Let's see for some other good format. No, not this. I need some good format. Okay, so now see here. In this, we have under the liabilities something called as retained earning. Retained earning is nothing but your net profit only. Retained earning is nothing but your net profit only. Okay, so when you are having a profit for a company, why it is shown on the liability sides. So first of all, understand liabilities and assets. When we say it as assets, it is the company which owns. Liability means the company which it is owing to pay something, owes to pay something. Okay, so here it is a company. Assets is a company which is having in its in with this with itself. Liabilities which it has to give to some other else, to some other person. Now, when I have to give some other person, profit which is earned by a company, profit which is earned by a company, that is retained earning, why it is shown on the liability sides? Can anyone answer me this? Can anyone answer me? Please respond. If you don't respond, I may not be able to explain you clearly. At least respond me even though it is wrong. I don't mind it. No problem. Okay. I just need some response from your side. If you all are just quiet, then I won't be able to understand whether I'm going in a right way, whether you're able to understand. At least respond me something.
Ma'am,
Ma'am, can you
because
please
the
repeat
profit
it?
will be taken by the owner of the company.
Yes. Owner by the company. Profit will be taken by the owner of the company. Yes. Okay. Amrita, you are supposed to say something?
No, ma'am, nothing.
Okay. So Chanda, right? Yes, you're right.
Yes, ma'am.
So it is a profit that is given to the owners. Why? Though we because we treat here both as a different person, both we are treating as two different person. That means a business is earning a profit. Business is earning a profit, and this profit has to be given to liable to pay for business owner. Business owner, that is what we show it on the liability side. Okay, we are liable to pay to the business owners. Is it clear to everyone, the accounting concepts? So I'm not going very deep also, just the basic concept. What is transaction, how what you are going to debit, what you are going to credit. So finally, end of the year, the motive of a business is to find whether you have earned a profit or not. To find the profit or loss, we will be using here three reports has to be created. So this three financial reports, we call it as financials report. Okay, the financial report. This three financial report is your trading account, trading account, and then you have a profit and loss, then you have a balance sheet, and in the balance sheet, before you do a balance sheet, you also have to do another report that is called as cash flow. How much exactly cash you have, cash flow statement. So we are not creating all this report in our SAP, right? We will understand the concept first, and then we will start doing the company's accounting. This will have only the financial activities. SAP FICO, financial and controlling activities. This is what we are going to see. Is it clear to everyone?
Yes, ma'am.
Okay. Now, I'm going to stop till the accounting part. From tomorrow, we will start the SAP. Okay. Tomorrow, how to log in, how to create a company, how to do the transaction. All these things we will discuss in tomorrow's class. Okay. So, why I started with an accounting part? To know what are the concept, how we build with an accounting. So, without knowing a accounting part, we can't do the accounts of the company. Is it clear? If anybody has a doubt or any questions you have, you can ask me. Girls?
Ma'am, can you
Yes,
explain the
ma.
last part once
Which
again?
one, ma?
The
The
last
profit?
one. Uh-huh.
The concept of profit?
Yes, ma'am.
Good. So, see, whatever we are doing in a business. Now, I'm running a business. To run a business, who gave me a money? To run a business, that is ABC Private Limited Company. I want to run this business. To run this business, someone gave me a money. That is Mr. A. So as per the Companies Act, that is there is one rule. We have to treat this business and business owner as two different person. So we have a two different person. One is company and the other one is owner. Now owner is giving you money. Giving you means it is not you, it is your company. Owner is giving a money to the company to run. Company is taking a money. Now company is earning a profit. Company is earning a profit. How did you earn a profit? From the money which Mr. A has given. So what we will do? The profit which we have earned from by running a business from Mr. A's money. So this profit which is earned, we will pay back to Mr. A. That is what we say, this retained earning in the liability side. That is, company is liable to pay the profit earned to the business owner. That is what it is added with the money that the owner is been invested. The money which he invests, we call it as shareholders. That is we also call this shareholders. We call it as preferred shares, equity shares, anything we can say. So, or we can also say it as capital. So, the money which he has already invested, with that, the company which has earned a profit will get added. So, overall, it is together is money we are adding here. We will add and we will put it here. You can see in this image, if you see any values with the minus sign or within a bracket, then it means it is a deduction. No brackets, no minus sign, there is no deduction here. Clear? You can see your land in this, there is a minus sign. Okay, depreciation. So you know what is depreciation and appreciation, girls?
Yes, ma'am.
Yes, ma'am.
What is depreciation?
Which the values of things goes down is known as depreciation. Appreciation value increases.
Yes. So any assets are long term, which stays in your business for long term. Say example, you are purchasing a computer for your business. If you are purchasing a computer for your business today, then you have to return after 2 3 years using it. You have to sell this computer. When you're selling a computer, can I sell the computer after using 3 4 years? Say example, I purchased a computer 3 years before. Now today I want to sell this. I purchased it for 50,000. Today I want to sell it. Can I sell for same 50,000? Yes, no.
No, ma'am.
Why? Because the product is being used. When we use it, the life of the product will get reduced. Right? There are many other new products with the new features, which I have is something which is with the old features. So when a product is being used and the values is getting down, the value of my product is getting down, then we call it as diminishing. That is depreciation. When I say appreciation, the value of the same goods when it is increasing. Say I have purchased a land, agricultural land, 3 years before. Now I purchased for 1 lakh. Today the value of the land will be the same 1 lakh, or it will decrease or it will increase.
It will increase, ma'am.
Yes, the product that will have an increase in value always. That is called as appreciation. Land, property, gold. This will have an increasing value. That is appreciation. Plants and machinery, computers, laptops, printers, plant and machineries, all these things which we are using. This and all, since we are using any devices, the value of that product will get reduced. So because of that, we call it as depreciation. So finally, I'll come to know whether I have earned a profit or loss. Clear now? Is it clear to
Yes,
everyone?
ma'am.
Okay. So yeah, Kritika, you have any questions?
No, ma'am.
Fine. And how about the others?
No, ma'am.
Fine. From tomorrow's class, we will start SAP. And I saw your message that you had posting saying that you have a sports day and SAP installation process will take. See, you can just do one thing. You don't have to stay with your laptop. Just hand over the laptop. The person one who comes, he will install and give it to you. You can go and participate in your sports. Okay. So the process for installation for each and every system you need to copy. So that will take 2 3 hours.
Ma'am, where we should give the laptops, ma'am?
How the person will come to your college itself, Makriti.
Okay, ma'am.
He'll come to college, or you can take any person's help, like your college coordinator or your class coordinator, your faculties, teachers, anyone, so that you can give all your laptops. In case if you have a laptop is having a password, write it in a paper, keep it in your laptop itself, so that whenever he opens, he can log in with the password. Without password, he can install also, right? So
Okay,
hand
ma'am.
over to some person who is responsible for that along with the password. Only then they can install it. Without the password, I think it will be a problem. Again, you have to wait for installation until the process ends. Fine. Okay, so we'll wind up the class for today since it is a first class. I'm just winding up by this time. So from next class, we will have till 8 o'clock, 6:30 to 8. Right? If and no questions, then we can wind up. Let me ask you at last, do you have any questions for today's class?
No, ma'am.
No, ma'am.
Fine then.
No,
Thank you
ma'am.
all. We'll see you in
Thank
next
you,
class.
ma'am.
Yes, ma'am. Bye. Take
Thank
care,
you, ma'am.
everyone.
Bye.
Yes, ma'am. Bye bye.